Hello and welcome to the day ahead. It's Thursday, December the 1st. I'm Andrew Gagan. Well, stocks on Wall Street have surged following comments from Fed Reserve Chair Jerome Powell, who said the central bank may scale back the pace of its interest rate hikes as soon as this month. However, he did caution that the fight against inflation is far from over and it's not known just how high rates will need to rise. The S&P 500 rallied from an earlier loss and the Nasdaq extended gains, while the S&P 500 has now ended November with its second straight month of gains. But it is down around 16% so far this year, while the Nasdaq has lost close to 29%. Stocks specifically, Apple was up more than 3% and Nvidia jumped. Tesla shares also moved significantly higher after the China Merchants Bank International said its sales in China in November were boosted by price cuts and incentives offered on its Model 3 and Model Y. And shares in Biogen rallied after trials showed its experimental Alzheimer's drug slowed cognitive decline. Well, the Federal Reserve could scale back the pace of its interest rate hikes as soon as December, says Fed Chair Jerome Powell, saying it makes sense to moderate the pace of our rate increases as we approach the level of restraint that will be sufficient to bring inflation down. The time for moderating the pace of rate increases may come as soon as the December meeting. But the Fed chair emphasised that the most important question is
of how much further we will need to raise rates to control inflation and the length of time it will be necessary to hold policy at a restrictive level.
He said the terminal rate is likely to be somewhat higher than the 4.6% indicated by policymakers in their September projections. Meanwhile, the US jobs market remains resilient, although job openings did increase by 353,000 to 10.3 million by the end of October. It was the 16th straight month that the jobs report showed job openings were above 10 million, with 1.7 job openings for every unemployed person in October, down from 1.9 in September. And private employment increased by 127,000 jobs in November. That's according to the ADP employment report, which was well below forecasts. In the Eurozone, inflation eased far more than expected in November, up 10% after a 10.6% increase in October. The data has seen markets now price in a 50 rather than a 75 basis point move on rates by the ECB for December. US Treasury yields, they fell off the back of those Fed comments. The 10-year note down to 3.7%, the 2-year at 4.42%, and the US dollar index fell around 0.5%. The Aussie dollar, it did touch 68 US cents, has come back a little since then. Well, the Australian share market is set to open positively, with ASX futures currently up 0.75%. In the commodities complex, oil prices were boosted on signs of tighter supply and a weaker dollar, as well as optimism over a recovery in Chinese demand, although the gains were tempered by speculation that OPEC Plus won't alter output at its meeting next week. Iron ore futures were lower, base metal prices broadly higher, with copper climbing to a 2-week high, boosted by the weak US dollar, and that also saw the spot gold price up more than 1%. That ending its best month since mid-2020 for gold. And positive investor sentiment has pushed the crypto market higher, with Bitcoin moving above 17,000 US dollars. And that is your day ahead. We'll see you again tomorrow.